Hey guys, welcome back to the channel. This is Wooly from SquirtDayPanda.com. Today I want to talk about profit taking and maybe some basic asset allocation for all of you new 100,000aires and millionaires and above. So I got this idea from after a long call from someone that I haven't heard from in a while. And at first I thought, oh, is this person gonna ask me for money or something? But then, as it turns out, it's actually a very good thing. He actually made a lot of money, and he just wanted some. He was just wondering, what should he do with like all this money? And first thing is like he did not take a lot of profits yet. So that's one of the things I want to talk about. I think during this crazy year, in the beginning, close to the beginning of the years, some people were making some money, and then during around March and April, they lost a whole bunch of money, and then they some of them were very fortunate, and they got the approximate bottom right, and they bought a lot of stocks, or they in this case bought a lot of leaps, a lot of leap calls, and right now they're sitting on some very substantial profits. So let's just say, for example, you're sitting on roughly $1 million in profit. This is I'm talking about less your the current market value less your cost basis. So your current P&L is around a million or so. Let's just use that as an example. If I were in that situation, I would take off about half. Again, this is not financial advice. This is more of maybe some tips and suggestions of what you could do. I'm just gonna let you know what I would do in that situation, because I'm not a licensed financial advisor. Okay, so you shouldn't just take advice from random people on the internet, but just to make you feel a little bit better about what you're about to listen to, I do have a master's in finance, and I was a financial analyst for various banks and insurance companies. So I like to think that I know a little bit of what I'm doing. So if I were in that type of situation where you're sitting on very good profits, I would try to take off about half. So let's say you set aside 500,000. I would transfer that to us, either a few bank accounts, or a at a mutual fund company, maybe like a some type of money market account, just to keep it safe for a while. Because don't forget, you're gonna have to pay taxes at the end of 2020. It's already October, so you have about 3 months left. So out of that 500,000, depending on your federal and state income taxes, I would recommend, out of that 500,000, take about 125,000 to 167,000 of that. So basically, roughly a quarter to a third of that 500,000. Put it in a safe place that you're just gonna leave it for the upcoming taxes that you're probably gonna have to pay. And then the rest, I would recommend, I would personally either pay down an existing mortgage, or if you've already like this person I was talking to, they're already either thinking about paying down the mortgage or paying it off completely. But if you're if you're not a family person and you're just starting out in life, like you're very fortunate, you just worked a few years in the corporate world, should use that money to either maybe upgrade your things that are useful, like a car, maybe set aside a down payment for a house. Just take care of all the sensible stuff first, and then this way you have still 500,000 in the markets, and you don't have to take take all those profits right away. Because personally speaking, I think there might be a little bit more room to run. But who knows? I mean, the market could crash. But if the market does crash, at least you've taken half off and you've put it in a safe place and you're doing sensible things. The other half, that other $500,000, you can use it. You could try to ride it as far as you can, and at that point it's just like more of a fun money. Your investor psychology or your trader psychology comes into play. You're not as stressed because you've already taken some money off the table, and now you can start maybe reallocating some of your portfolio. Because this person, he had a mishmash of positions, various stocks, and then this person started playing around with leaps, which is good. At least with leaps, which are long-term equity anticipation participation series. Basically, they're just longer dated calls with at least 9 months of time value remaining. But at this point, some of them are already 3 months out. At first, there were at least nine to almost 2 years out, and now they're close to only 3 months remaining. So I think if I were in that position, I would start taking off any of the losers, so at least you can lower your profits fully, or at least for tax purposes. And then you can also start taking profits on the options that are closer to expiration. And then with stocks, with some of the stocks, if you have 100 shares or more, you can start selling covered calls. And then with some of the longer dated calls, what you could do is start selling what they call a poor man's covered call, which is you have a call which is some of them are actually in the money already. So for that person, like, they could start selling, they can turn that leap into sort of a diagonal spread. So you can sell calls shorter term against a longer term leap or a longer term call option, and that helps to bring in, like, it's not true income, but it's close. And what you can do is, if the short call goes in the money, you can take off that short call and one of the options, and you could take it off as a spread. You might be giving up some money or some upside potential, but at least you have you're starting to bank some of those profits, and I think overall that'd be a good thing. Because don't forget, I don't expect these kind of crazy good times to last that much longer. So at least, like, along the way, you're taking some money off the table. So yeah, I hope this helps you. Maybe some of the when you start taking some profits, like, you can leave it in cash. I don't see that many bargains, so you can, if there's another market crash, at least you have a cash cushion, and you can start redeploying those proceeds into some Wheel of Fortune strategies where you're selling puts against stocks that you might like for the future. And maybe you want to actually retire a little bit earlier. You can start selling puts against dividend paying stocks, and then this way you have a more stable source of income for early retirement. Or maybe you can take the proceeds and you might want to start another business or do something else. Take some time off. So if you're in that fortunate position where some of your crazy bets actually paid off, then hey, do the sensible stuff first. Cash out half of it and let the rest ride. So if you want more ideas, like, let me know what exactly you want. Do you want me to talk more about asset allocation, or do you want me to talk about profit taking? Do you want investor psychology or trader psychology? Let me know in the comments below, and I hope this helps. And hey, if you made some money, good for you. And if you haven't made like good money yet, don't worry. I mean, your time will come. You just have to just stick to it, keep learning. So I'll see you guys in the next video. Thank you.